All right, everybody, today is the day. Palantir Q2 2023 earnings. It is happening, finally, August 7th. We've been waiting a long time for this. It's gonna be really exciting to see what we got in earnings. I'm outside right now. You're probably seeing or hearing some of the water over there, and the birds may be chirping outside, so hopefully it's a little bit more soothing as I speak about Palantir earnings. But today's the day. Now in this video, I want to do a couple things. Number one, I want to talk about some of my expectations going into earnings, not only just about what Wall Street cares about, but also what I care about as a long-term investor and some of the numbers that I want to see, or the numbers that I really, think are the most interesting to talk about. And I also want to hedge back against the narrative that some articles are pumping out, raising expectations, I think, a little too high, and they might be doing that for a specific reason, and so we're going to talk about that. But there's just some stuff I saw in terms of expectations that were a little unreasonable, and so I want to discuss that as well. So let's get into it. Now, before we start, I'll be live streaming 3:45 p.m. Eastern Standard Time. So for about 15 minutes, we'll be talking about kind of, where we think the numbers are going to be and what's going on. And then at 4 p.m., it will be time to get the numbers. We should get the deck by 4:05-ish. And 5 o'clock, they will have their actual call. And at 5 p.m., I'll be live streaming the entire call, the Q&A, all that stuff. So it's going to be an exciting event. As a Palantir shareholder, we get 4 Super Bowls a year. And so this is going to be one of those Super Bowls. And it's going to be exciting to see what management is able to do. Now, a couple things. First of all, hedging back against some of the weird media assumptions I'm seeing. Over the weekend, I saw a ton of articles on just a bunch of different finance websites saying that expectations for Palantir in terms of revenue are $550 million. That is not what management guided for. To my understanding, management guided to $528 million to $532 million. 532 on the high side, 528 on the low side. We got 525 last quarter, so that's like a 1 or 2% quarter-over-quarter growth. That is what I'm expecting. I mean, in all reasonableness, I know that 506 million was the Q1 target and we came with 519. You got to remember 17 million of that was from short-term treasury bills. So if we get to 550 or 547 or 548, that would be amazing. I would be very happy, very excited for the company that they were able to do that, but that's not what I'm expecting. And I think a lot of these articles are coming out with this like, oh, you should expect 550. And then imagine Palantir hits 550 and then there's a sell-off because the expectation was 550, which is ridiculous. The expectation, at least from more legitimate websites that I've seen, is 532 because that's what management said and that's the actual data that they're taking into account. If you artificially raise it by 550 on the assumption that Palantir is sandbagging, yeah, you can have that assumption, but you can't say our new expectation is 550, 560 million if management said 532. Right? So to me, if they come in with a beat, which I think they will slightly beat, I don't think they're going to miss, but if they come in with a beat, it's going to be good. It's definitely not going to be bad. I don't expect them to miss by any sense of the imagination. I expect at a minimum $528 million in revenue. But if they come in with a beat, hopefully the street, rewards it versus thinking, oh, we expected 550, even though management guided 532, but we baked in the sandbagging. So, now we don't care if you beat by 18 million or something. Hopefully that doesn't happen. But I did want to warn a little bit because some of those articles I was seeing was just ridiculous. Like management says 532, expect 532, not 550, just because you want to expect 550. Now, having said that, if we get 550, that would be amazing. But in all expectations, Q2 is the hardest or the hardest quarter for SaaS companies. A lot of times you're getting clients, you're getting sort of basically contracts, MOUs of like, all right, this is what's going to happen, but you're not recognizing revenue and you're definitely not closing deals. Not saying that you don't close any deals in Q2, because we've seen a lot of what Palantir has done over the past couple of months, but Q3, Q4 is when you really start recognizing revenue and locking in those contracts. Q2 is not the easiest. So I don't expect Q2 for them to have closed an insane amount of deals to have like this insane amount of revenue, because that's not what management guided for, right? And so I'm expecting more in line with 532 million. In terms of profitability, I expect us to be GAAP profitable. Still 1 cent of GAAP profitability, 5 cents of adjusted EPS. It might be 6 cents of adjusted EPS, maybe 2 cents per share of GAAP profitability, but definitely not expecting that. Palantir is not in the position yet where they can, start generating massive beats quarter over quarter in terms of increasing their earnings per share. But this quarter and this year, the only thing that matters is, are you GAAP profitable? If you're GAAP profitable, you have a chance to be included in the S&P 500. When you have a chance to be included in the S&P 500, you have many institutional investors that will have to start buying your shares. In fact, I was watching Karp on Q1's earnings call basically just say, when he was saying, how much he cares about retail investors, he was like, I know one day we'll be in the S&P 500 and we'll have more institutional investors than retail investors, but you guys are the ones that I care about the most. So he knows that S&P 500 is coming. I think the entire company's positioning themselves for the S&P 500, and the CFO in the last earnings call also said to focus on the U.S. commercial business because that is what's going to be guiding them to GAAP profitability. So I definitely expect, even if government slows down, even if international slows down, which I know they're struggling with a little bit of international, U.S. commercial is where CARP says they're growing like a weed, and as a result of that, they should be able to become GAAP profitable. Now, the only other number I really care about, so revenue, $532 million, GAAP profitability, EPS of 1 cent. Stock-based comp is probably going to go up just a little bit because CARP said you should expect stock-based comp to go up throughout the rest of the year, but hopefully it's still in decline at the end of the year, falling about 25 to 30% year over year. I expect it to fall in that line of 20 to 25% year over year as well. The other number, the only other number I really care about is customer count. I mean, that to me is, yes, there's net dollar retention, that's important. Yes, there's government growth. Yes, there's total contract value. Yes, there's billings, even though a lot of those went up over last earnings. I mean, total contract value was up 60% year over year, which is just amazing, right? So if it goes up another 10%, it's like, all right, that's awesome, but it's already up 60%. What I really care about is customer count. If they can get that customer count to a stronger range, I think they're at 380 right now. If we can get it past the 400s and maybe even a little bit past that, I think this is going to be showing us the trajectory of what the company is able to do because they're actually getting customers. Recognizing revenue is irrelevant right now. I mean, they don't need to recognize revenue. They need to get clients. Arnie made a really good point on the latest Palantir Weekly podcast. This is the clip if you're looking for it, where I put nachos, cheese, and dip and Palantir's logo as a thumbnail, because a buy the dip scenario to me happens when they increase customer count and the street still sells it off because they didn't do amazing on revenue. That is irrelevant. If we see the customer count start to accelerate to a really decently strong level, then to me it means that they are closing deals, and those deals don't need to be recognized in terms of actual revenue, but eventually they will be recognized. And more importantly, their ability to close deals that are either upsells, which we've seen a lot of their customers in the past. They come out with press releases. Jacobs was a great example of them using Foundry. Now they're using AIP. Can they do that to more customers? And I'm pretty sure CARP is going to give some guidance around how they're upselling during the earnings call. And how can they get more smaller deals? 64 deals last quarter were signed, and I think 5 were of $1 million or 10 were of $5 million. So they're starting to get more into the SMBs. Not crazy, but they're starting to get to some of those other small segments. I want to see that increase potentially. That would be really nice to see them get more small businesses, more people that are coming into Foundry and AIP. And then I want to see the TTM, the average revenue per client or top 20 client, potentially also go up. I think it went from like 40 to 45 million last quarter. If that can trend to like 50 million, that means those customers are getting even more value from the product, because the correlation with the product and the customer's revenue, given the product is an entire operating system for the customer, is that the customer should be doing well if they're using your product, which is good for the long-term trajectory of them staying with that product, making sure they don't leave that product, and then Palantir being able to upsell them on more products in the future that they can sell. So to me, customer count is everything. Not everything has to be perfect with customer count. They don't have to get, a ton of small business deals. They don't have to increase the average TTM revenue per top 20 customer by, billions of dollars. They just need to show that they're signing more customers. And what I'm expecting, quite frankly, is for them to not get a ton of customers. Because again, Q2 is not easy. And I know they've announced a lot of deals over the past couple of months. I don't know if that results into, 500 customers, which I'm not expecting at all. I think 400 is reasonable. I think it was 380 last quarter, so if you can get to 400, that's really nice. But if it comes in at 395 or 399 or 401, I think that's totally fine. What I want to know qualitatively from management is what are they seeing in regards to demand for their products, and how is that demand translating into actual sales? And so I think on the earnings call, one of the biggest questions for CARP is going to be, you said you had a crap ton of demand on the Bloomberg interview a couple months ago. Is that demand turning into deals that can actually be closed? Is that demand actually turning into customers that you believe want the product? And it's up to CARP to really steer that conversation in the right direction. And one would hope that because you put the pieces together from the Dan Ives report saying he's talking to all these CIOs and there's no other alternative but Palantir is what they're telling him. You put the pieces together and see why is Databricks acquiring a company for $1.3 billion to basically create some of the AI infrastructure that Palantir has spent decades perfecting and building. And then you really look deeper into why LLMs are beautiful for Palantir, because they have an ontology, and the whole point of an LLM is to take data from a structured ontology in the first place. You start putting these pieces together and you're like, what CARP is saying about demand should add up, and it should either show in the numbers, hopefully, with increased customer count, even if it's not revenue, because that's when the dip should be bought, because that means they will eventually recognize that revenue, but they're getting these customers in, which is the most important thing. And that was Arnie's point on the weekly podcast. Or that CARP is saying, look, even if we haven't actually closed these customers, we are still getting a massive amount of demand, and we're just in the early phases of closing these customers. That's all I really care about, to be honest, on this earnings. I mean, everything else to me is noise. The main thing is, are you closing these customers that you said you have a crazy amount of demand for? And if you are not, that's okay. But are you still in the position where you think you have kind of a monopoly in terms of all this demand specifically for AI infrastructure? And are you in the process of closing those deals? Because if you didn't close those deals in Q2, I'm not going to sell it off, because my long-term thesis is you will be able to close those deals, and you are one of the only companies in the world that can close those deals. So as long as I'm steered in the right direction, that yeah, those customers might not be closed, but eventually they will be, I'm holding the shares and I'm buying more if it dips, because I know what's going to happen in the future. But I need that issuance by CARP, by management, potentially by guidance being increased if they think they're going to be able to get those customers, which means that revenue will be recognized, or by the hard numbers just showing they were able to increase customer count. Those are the things that I'm looking for, the things that I care about today. And those are the things as a long-term investor I'll be caring about the most. Again, the buy the dip opportunity to me is customer count goes up, revenue either misses or slightly beats, and the street sells it off, because we know how Palantir is able to get more out of their customers. They just signed a deal with a company they were working with in 2021 for a 5-year extension. You know, they got $463 million from the Space Systems Command. They got $110 million from all these DoD Special Operations Command. And a lot of these contracts were sole sourced, not single source. Sole sourced meaning there was no competition for the contract. Single sourced means there was single bidders competing for the contract. This was sole sourced, which means they had to source only Palantir solely because there was no one else to get there. So if I continue to believe that their software is a pseudo monopoly and it has the ability with the correct distribution in the third-party channels that they're working with, like PwC and Accenture, etc., to be able to access more sales, as long as I'm still confident about the product and as long as I'm confident that CARP is steering the ship in the right direction, then there's really no reason to sell it off. If anything, that's an excuse to buy more shares. So, not financial advice. Those are my thoughts. For people who want to know how I'm thinking of a dip that's coming, those are the metrics I'm looking for. And if I don't see those metrics, then I have to think twice about buying the dip, right? These are things that I have to think about a little bit more, but that is my general philosophy about how I'm thinking about what's going to happen in Palantir earnings. Outside of that, there's not really that much else I care about. The big thing is customer count, revenue, 532 million, that should be fine. EPS, GAAP profitability, we know we're going to get GAAP profitability. And so the final thing then becomes, can CARP shear the ship in the right direction the same way he did after Q1, where everyone was blown away by him saying we have massive, massive amounts of demand, hundreds of conversations. Do we get qualitative feedback like that still, or does his tone switch a little bit and things maybe are a little bit more shaky? That's really what I'm looking for, and it's going to be exciting to see what happens. Overall, this is one of the most interesting companies in the world. I am humbled and privileged and blessed that people care about my commentary around the company, because I've studied the company deeply for the past few years. I've enjoyed the journey of covering the company for the past few years. It's the most exciting thing in the world to cover, which is why I continue to cover and make content about it. And as a shareholder, I'm very excited to see what the company is able to do. One quarter does not define my long-term thesis, but because the stock is up 200% year to date, obviously this quarter is going to be heavily anticipated by lots of people because of how the stock has performed. And whether there's a sell-off or it increases, as long as my thesis for the long term is confirmed, then that's really what I'm looking for in this earnings. So that's it for me, 3:45 p.m. Eastern. Excited to see you guys, and we'll talk then. Bye-bye.